watching India market close, and it's looking like we're going to have a so-so end to a very, very volatile week. At least the Nifty in the green. Markets now in the green, but I want to pull up the advanced decline ratios and give you a sense of what kind of a day it has been. I would say choppy in a narrow range and pretty much showing that kind of a steady state. Not too many risks being taken in a week which has a small trading session tomorrow. Remember, you will have an opportunity to trade tomorrow, but don't expect any great volumes. The advances overshooting the declines for now, but even that is a story of a few stellar standouts. Let me pull up the heat map and tell you what, that one snapshot tells you what the story of the day really is, and it's all about M&M. M&M has had a fantastic move today. In fact, at nearly 6%, it's off its day's highs, was about 7% up at one point. JSW Steel now climbing up the charts ahead of its numbers, which are expected post markets close. Ultratech, Kotak Mahindra Bank, some of the winners over there. Shriram Finance also not doing too badly. In fact, Kotak Mahindra Bank having a pretty good day when others in the banking pack are not that hot. Tata Motors, Maruti. So auto is dominating over here. You have some play off results with the JSW Steel, but otherwise on the losing side, a Cipla is languishing over there. TCS continues to sulk, as does Hero Motors. So not really partaking in what we've seen in terms of the auto pack. The two-wheelers, both Bajaj Auto and Hero Motor, not doing too well today. But the broader markets also where the action is, and Samina's joining me today on India Market Close to talk about that. Much better mood, Samina, I would say, on the broader markets. The Nifty mid-cap up 1%.
It's PSU stocks, Tamanna, I think, and that's the story, right? So that turn-on number yesterday has boosted your mid-cap and small-cap.
The turnout number was a turn-on, at least for the stocks.
I guess if you want to call it that, it is Friday afternoon. But yeah, the small and the mid-cap space clearly outperforming the benchmark. Bank Nifty, remember, is going to be important. You want to close above 48,199 to be precise for a decisive move in the northward direction. Bank Nifty looking better than the benchmark itself. And the broader markets having quite a field day. It's largely earnings driven, and everything PSU is looking good, largely in the defense space. So look at your BDL, look at all those counters having a field day, or having lots of Friday cheer in terms of trade. On the sell side are largely counters that have disappointed the street in terms of earnings, where expectations were running high, and there's some amount of profit taking, which no one's going to complain. You're going into a long weekend. There's uncertainty not just locally but internationally as well. So you want to keep all that in mind ahead of a long weekend. BDL is the stock of the day, in my opinion. Started the morning flat, wasn't getting up to too much. In fact, at some point it was even trading negative. But the last 1 hour has seen the counter gain 12%. From 2,100, the move has come all the way to 2,312 at the day's high point on BDL. BDL, along with itself, takes the likes of a Garden Reach higher. They won a big order from the Bangladesh government to the tune of $16.6 million. And that is boosting that counter. You can see the gains on the screen. 9% higher is what you had. Today, the day belongs to Garden Reach. Remember, it's a cash market stock, so that gains are actually phenomenal, given that it's not traded in the F&O space, so volumes will be much lesser. Mazgan Docks, Cochin Shipyard, I'm adding those names because that's largely the sector of shipbreaking or dockyard stocks that we see. All of them looking really good. Along with that, BEML also is not too bad in terms of trade performance. Talking about earnings, and we brought this to your notice in early trade, you had a very good set of numbers coming from Keynes Technology. Remember, it's a non-dividend paying stock, and Crompton's, and of course Endurance. But we'll start with Crompton's. Numbers were good. There was not much of a major beat in terms of what they reported, and neither were brokerages as enthused as the kind of gains you're seeing in the stock. The stock is up 16% at the day's high point as we see it. Along with Crompton, you've got Endurance Tech, if I can get that one up. Those were good numbers on the face of it. Frontline was a clear beat. Margins had have seen a 400 basis point expansion. Keeping that in mind, the stock got a thumbs up on the street. 8% higher on Endurance Tech is what we have. You also have Keynes Technology, like we highlighted for you just a few minutes ago. Good earnings, actually a very good set of numbers. Remember, this is a non-dividend paying stock. They do invest a lot back into the business. So keeping that in mind, seeing a 20% up move on this counter, which has been a slow move. The last 6 months haven't been phenomenal, or it hasn't really participated in much of a rally that the street has seen. So an outperformer in all ways is that Keynes Technology. Technology, 20% high is what we have. On the sell side, there's a little bit of profit taking. There's also Dixon Technologies. They have, of course, managed to do quite well in today's day of trade, got into new businesses. You remember their mobile business, which is a low margin business, is expected to contribute phenomenally to their top line in terms of revenue growth. On back of all that commentary, their margin expansion, the stock is up 8% as we see it. Well, you've got Honeywell Automation. It did a swing trade yesterday, so was down 7% at the day's low, finally went home with gains of 9%. This morning, no surprises there, 5.5% cut coming in because the numbers, in my opinion, were not a hit, they were actually a miss. But despite that, we saw gains on that stock, which are being given up in trade as we see. E-Clarks is the other one. Weak earnings, the stock gets beaten down. So counters that haven't delivered are the ones getting punished in today's trading session. But largely speaking, it's the weekend. You won't be expecting too much in terms of F&O positions being carried forward. You want to go in light, and that's largely going to be the big talking point this morning, this evening or afternoon, Tamanna.
Absolutely. And the other big talking point, of course, is that you're going into phase 5 of elections. That's why Monday there is no trading. And Mumbai votes on Monday as well, coming up ahead on the show. And just a sort of programming reminder there, you're going to have a very special segment we're doing about who are the players in Mumbai this time round, who are the candidates on either side, and how Mumbai is stacked up. Because remember, the whole 48 seats of Maharashtra is where you don't have a clear focus right now. But let's get back to the markets. And, the stock this afternoon, stock of the day really is M&M. I'm going to speak now with Jay Bala of Cash the Chaos and Chakri Lokpriya of Red Strawberry, giving us a sense of what to expect in the markets and with M&M. Good afternoon to both of you. Let me start with your take, Jay. First, on the indices, Nifty and Bank Nifty?
Yeah, Nifty and Bank Nifty are doing pretty much the same thing, going to fresh all-time highs, dropping back to the previous range. So there is no decisive move or breakout on either side. So as long as the Nifty stays above 21,770, I think the markets are safe. But I think it's a matter of time before the critical support of 21,770 breaks. The banking index similar. Probably there is one final euphoric high towards 50,000 mark and then a reversal. But still, both the indices are doing pretty much the same, staying above critical support but coming very close to it. The problem, like I pointed out, this inculcates the habit of complacency within the market players. So that is something to watch out for, and we have a higher Nifty VIX, they pointed out last time too. When it comes to M&M, yeah, it's still got very strong momentum, and it's still not done its move of the move that it started from November last year. So probably further higher highs to come through. The next pullback would still be a buying opportunity.
Jay, I don't know if anyone can be complacent in this market because it doesn't cease to surprise. I mean, yesterday afternoon exactly at this time was a case in point and where you saw this big turn in. But just quickly wanted to know your take on M&M before we go to our special segment where we're breaking down a bulls and bears case. At this level, what would you do with an M&M? Already had a very, very decent up move. After numbers yesterday saw an up move, solid and steady, another 6% up.
Yeah, M&M, I'll wait for a pullback, Tamanna. So the pullback level is somewhere close to 2,200. I don't know if the market will come down to that, but you got to be patient. I think the stock structure is such that even if the rest of the market were to drop, this pullback will be bought and bid higher. And we're looking at fresh record highs, somewhere close to 2,700, probably even 3,000 for M&M. But it's it's gapping up, and there is a surge of optimism in the stock. So you need to keep your risk reward on focus. So that's the reason why you need to be waiting for a pullback. But if you're already long from say March or earlier, somewhere earlier, you can still hold on to it. The trailing stops comes at about 2,100.
Well, the stock of the day on the Nifty 50 has to be M&M. The euphoria is evident, 6% higher on the counter. But be fair for me to say that the street may be divided between the bear and the bull on M&M. It's a classic case of a clash between two very strong opinions. Puneet and Harsh are standing by with more on that. Boys, what is it looking like? Who's winning this battle? For now, I think the bulls are in control, post-earnings at least.
Yeah, definitely looks like a very big upbeat on the results by M&M. More so on the commentary of what the management had to say and what Mr. Anisha said to our colleague Nikunj as well this morning. But we look at what the strong results is, why this rally, and look at the bull as well as the bear case for M&M. Now, if we start with the bull case, the first one is, of course, has to be the strong product portfolio as well as the launch that the company has spoken about. 16 new launches by the company over the next 6 years till FY30 till 2030. EVs included in this of 6 to 7 new born EVs, as well as a strong booking number which the company already has of roughly 220,000, which excludes the additional 50,000 for the brand new launch of 3XO. But I feel like Harsh has something to say about it.
Oh, absolutely, Puneet. So there could be delays here because the production ramp up from sub 50,000 to 64,000 is no mean feat in a year. And thereafter to take it to 72, any delay here could actually be a negative on the counter because it's pricing in a lot of these positives, which you've just spoken about. The other piece is in case the launches get delayed as well. You have plenty of launches lined up over the next few years, including the new Thar, which I'm really looking forward to. But any delay there could be a negative.
Well, certainly, when we look at the second case of what could have led this particular rally, we look at the strong operating leverage as well as the margins the company has maintained in this particular financial year, coming at for this particular quarter, it's coming at 13.5%. Mr. Anisha has said that this will continue to stay strong for the company as they are looking forward to the next financial year as well. And they have also said that the debt level is right under control of them, just above 1,000 crores right now. It's down from the peak levels of roughly 6,000 crores over the last 3 to 4 financial years before. So really strong on the operating leverage as well as the margin side.
I take your point there, but what I still feel is it leaves M&M a window in terms of an opening on the downside with regard to margins where commodity costs are concerned. Because that could dent margins and therefore throw some of these otherwise logical arguments out of the window.
Well, it could make a case for the commodities, or not so friendly for the automobiles. When you look at the third bull case of what could have led to the particular rally, we see that M&M becoming not now replacing Tata Motors as the proxy SUV play. They have launches here. They already have 5 SUVs currently, if you include the Bolero as well as the Thar, as Harsh rightly said. And it could be a key positive here. Do know that Mr. Anisha has said today that they will only be in the particular SUV space. They are not looking to enter any smaller car segments or so. And the 16 launches, if they're promised in this particular segment, will be across price ranges, surely catering to a larger audience as well. And that could bring in new buyers. Do note for the 3XO, they have already said that roughly just 15% of the existing M&M buyers are the current ones who have booked for the 3XO as well.
On this count, I really want to contest because you have the new EV policy coming in. With the Teslas, the BYDs of the world coming in, definite competition for someone like M&M in the premium space. So that's my first point. The second point is absolutely any loss of market share here could be a dent with regard to sentiment as well as numbers for M&M. And therefore, the sense is that you're pricing in the positives, but there likely could be some negatives with regard to competition and maybe some lower domestic growth.
Well, if you look at the last two ones, what could have led to this particular rally as well? Well, the units are, of course, expected to perform better going forward as well. When we look at, the other two conglomerates, it is a conglomerate, so we saw the other Tech Mahindra hasn't done well anything in the past 2 years, but they have had a CEO change. And Anisha has said that over the next 2 to 3 years, we could see a turnaround in this business. MMFSL, the financial services entity, has been under the radar for not the right reasons as well. There was a fraud reported earlier as well, but the company has said that that was only a one-time thing and they are looking forward as well as moving forward on that basis as well.
I'd call that a distraction, Puneet, because you're a focused auto player versus you're a conglomerate. There's definitely some amount of distraction when it comes to management bandwidth. And therefore, the diversified conglomerate structure only increases the risk, if not, it doesn't reduce it in any way.
That's right. And finally, the last one, what could have led to it? Investments of roughly 27,000 crores lined up over the next 3 fiscals, the highest ever, the first time ever the company is giving it a guidance of 27,000 crores. This is only the auto one. On an overall basis, it is higher at 37,000 crores. Of course, they are saying that the current operating leverage as well as the cash flow that the company is generating will aid for further capex as well. But currently, it's a big amount. Do know that in the company's history as well.
Valuations are not cheap, Puneet. So despite all of this clawback of cash flow, you're seeing valuations on a standalone automobile basis at 18 to 20 times EV/EBITDA forward, which is quite expensive. Given past M&M, definitely expensive. But even if you don't benchmark it to the past, it's quite expensive. And most of your maybe 80 to 90% of your valuation comes from that. So therefore, please be mindful before you look at.
So that's great. So you have a bull and bear case there laid out for you from Harsh and Puneet, and of course it's up to you to make that choice. Chakri, you heard their entire sort of argument. Which side are you on?
Good afternoon, Tamanna. Yeah, I think I'm on the side of buying the stock.
Yeah.
But, it pays to be a bull in a company which is doing a lot of expansion. And, doing expansion in the right areas, having a number of launches over the next many years, committing to EV, the policies, which we wanted to hear for quite some time. Yes, there may be delays. Yes, commodity prices can run up marginally higher, but that is something which, the whole industry can kind of, faces. So that's all right as long as they kind of deliver on their product launches. And more important, and equally importantly, they're spending money in both ICE as well as in EV. And because, the world might end up somewhere in a hybrid of the two. And, valuations for a company which is growing that fast, I think worth paying.
That completely rationalizes it. And remember, every big brokerage has a buy or an overweight on the stock, but at 2,000 rupees, M&M was expensive. At 2,500, it definitely is not a cheap stock to own. We'll take a quick break. The markets are holding up. I guess as long as we respect 22,400, there won't be too much of a complaint from the bulls on the street. 22473. So, of course, an attempt of 22,500 is very likely in the next half hour. We'll take a break. We'll come back and, of course, wrap up trade for you. The last 30 minutes turning out to be quite exciting this week. Welcome back. It's turning out to be exciting for the broader markets. Lots of movers, largely on back of earnings. Some are overreacting, I'd say, the likes of Crompton, which posted numbers which were okay. Maybe good to say the best, say the least, but the stock has done a phenomenal number this afternoon. Kanika is standing by with more on that, but just, okay, let's go to Kanika and get a sense of those numbers, and then we'll talk to Chakri and Jay about how how these counters look. Kanika, what stood out on these earnings, and what did brokerages have to say? 17% up move on healthy volumes is pretty phenomenal.
Yes, so With Crompton 2.0 strategy in play, the stock has seen a surge of 17.6% today. Now here are 5 things that the street likes about Crompton. First, electric consumer durable segment. Here it grew 14% year on year, and it was the only growth driver. In view of the strong summer season, which will continue in Q1 of FY25, ECD segment is expected to stay strong over the near term. And second is fans, where in FY24 the company sold over 2 crore fans, setting a record of high sales volume. Now this volume grew over 15%, and 1 in every 4 fans sold is a premium fan. Thirdly, pricing actions. Now the company had implemented 3 price hikes in fans in the second half of fiscal year 2024, and the management is also anticipating another additional increase in the near term. Fourthly, Butterfly, where Butterfly's performance is expected to improve from June onwards, and Q4 FY24 EBITDA margins of Butterfly were at negative 11.9%, whereas in FY24 it stood at 3%. Now Crompton is optimistic going forward about delivering double-digit margins from this segment in the long term. And finally, advertisement and promotion. Now while focus is on growth, advertisement and promotion spending will be high, and in FY24, they increased their spending by 39% year on year to rupees 250 crore. Out of this, 10% was on Butterfly, and this was for brand building, and the management has commented that this run rate will continue in the future.
Right, Kanika, it's the outlook that's keeping the street excited. It's more than what we are seeing in terms of numbers. Margins, of course, of the ECD segment was strong, but that was on back of seasonal strength. But of course, a large loss at Butterfly, including one-time impacts, is what probably made the numbers not look as good on the street. But it's an upgrade. Kotak Institutional Equities, Nuvama, both have an aggressive buy call on this one. Chakri, hi, it's Samina as well joining in. How do you feel about Crompton? Do you feel like the 15% rally is justified in terms of the strategy that Crompton is laying out for itself going ahead?
Hello, Sabina. I think, what happened with Crompton Greaves is the stock hasn't really done anything for the last couple of years. And for all the right reasons, it couldn't really perform because, it had an acquisition, it was losing market share, management was, saying things, and the fact that, it's a well-known brand name. And if they can hold on to their market share and demonstrate that they can actually improve in the coming quarter, and that's the benefit of drought that you're giving Crompton today. And I think, therefore, one can actually buy the stock.
Jay, do you track this one, Crompton, on the charts? How does it look?
Yeah, I recall some time back, I had mentioned that within the capital goods space, the leadership will be taken over by other stocks than Larsen. So that's what the market has been doing. Crompton, ABB, Siemens, they're all leading the way, leaving Larsen behind. Larsen is actually turning lower for the medium term. So, Crompton in particular has got very strong momentum backing it, just like ABB and Siemens. So much more higher highs to come through. But it's still a buy on dip stock. So the nearest support for Crompton is about say 340. So I don't know if it will still drop towards that level, but the next dip is likely to get bid up.
So Crompton is one. I wanted to also talk about Dixon. Now, okay, numbers were good, and actually maybe a little lower than what was expected. Great news flow on Dixon, very strong commentary by the management. All of that has happened the last couple of days. Now you've had a Morgan Stanley upgrade as well, and some excitement about, Q1, Realme, Samsung, all of those projects start playing out. But the kind of up move we've seen on a Dixon Tech is just completely unabated. Chakri, let me come to you first on a Dixon, and whether this is, one of those big bets you make if you're even talking about policy stability, continuity, etc., and then a furtherance of the PLI scheme, then Dixon stands out in that pack, isn't it?
Tamanna, you're absolutely right about, all those right things. It's not about the results in this particular case. The results are okay. They kind of came out with the numbers all right. But importantly, all the PLI and getting those new contracts, all those things are now increasingly will probably shape the future for the next 2 or 3 years of the company's revenue and EPS outlook. And that's the benefit of doubt that the market is giving to this stock, and also all the stocks in the EMC spaces, the electronic manufacturing space. So I think that as a sector, many of those companies like Kane, Surma, they all had underperformed for the last many quarters. I think now time, as the PLI scheme starts bearing fruit, I think these companies will do well.
Right. Jay, Dixon at 8941 still seems a good one, a good buy.
Yeah, I would say it's just for people who are already long, not for fresh longs here. It's it's been a four-bagger since 2023 October or middle of 2023. So it's definitely an avoid. It's running up with very weakening momentum. I don't know if momentum will clock fresh highs agreeing with price. At the moment, it's not agreeing, so it's an avoid for me. So if you want to look at something very similar to Dixon, it's not endurance.
Jay, would you sell? If you were sitting on Dixon right now and you saw this 8% up move, would you exit the position?
Yeah, in stages. I'll start lightening up in stages, but it's not a short yet. But when it comes to similar player you want to keep an eye on, probably it's Apple that I like at this point of time. Not a great structure, but potential to turn a little more stronger. So stop at about 1,050 would make sense. Probably if this is going to build as a competition to Dixon because it's within similar space. So I would look at Apple as a fresh new long within the space.
Jay, 4 stocks that I can't get my eyes off, and the street clearly seems to like them: BDL, HAL, Mazagon Docks, and Cochin Shipyard. Every time we think about, every time there's a structural breakout on this, it seems like it's ran away, but too soon to say that at this stage. From these 4 names, if you're to initiate fresh positions, where would you initiate them?
Very difficult. Most of them have been going very sharply. So I would say, because the momentum is very strong in Mazagon Docks, I will look at that. I actually liked Garden Shipyard before, and but even that's shot up even before we can talk about it. So so most of these names within the space is looking interesting, and it's got higher highs to come through, but nothing is coming with low risk. Be very conscious about it. If you're taking fresh longs here, there are higher highs to come through. Probably you'll be taking a higher risk for making lower reward. So that's the only holdback for me. But of these names, I like Mazagon Docks the best.
Okay, Mazagon Docks on top of that list, and there's no surprise in there. Look at that stock, 32% in the last 3 months, 13.5% just today. All right, let's turn our attention to what's happening on the F&O side of things. Agam is standing by to break down those cues. One assumes very careful trade. I know there's a truncated session tomorrow, Agam, but there is also a long weekend in that sense. Monday, there's no markets, and you're back on Tuesday.
Yeah, look, to be honest, a lot of participants in the markets were expecting a little bit of profit taking, perhaps pausing on the kind of activity that we've seen in what has been a very volatile and choppy week, but that hasn't really come to be. And in fact, we're continuing to see strength in the Nifty. Another 0.3% advance here. We see a little bit of an increase in open interest when it comes to the Nifty futures. The Bank Nifty futures, again, we are seeing some amount of positive traction, nearly the same as the Nifty. And again, about 2.5% added in open interest there as well. When it comes to the options market, as far as the Nifty is concerned, we were talking about 22,400 and thereabout, and that's exactly where we're seeing a lot more, traction being built. 22,400 and 22,500 calls us as well as puts seeing the most amount of increase in terms of activity, and that's also where we have a significant amount of open interest distribution when it comes to this weekly options expiry. But to talk about the other factors that are in focus, let's pull up stocks and see where in fact we are seeing more traction there. And no prizes for guessing. A lot of that will be on account of earnings. But Dixon Technologies really stands out along with Crompton. These are the 2 big movers in the markets, in the broader markets. with a substantial increase in open interest towards what looks like longs. And of course, we also have longs in Concor and Zydus. Concor started off the day with weakness, but it has also recovered substantially, in the management guiding for a significantly strong volumes growth for the upcoming year. And of course, in terms of stocks which are unwinding, let's pull that list up as well. Short covering for Persistent Systems, Bandhan Bank, Maruti Suzuki, along with something like a Sun TV. Bandhan Bank will announce its earnings a little later on. So I reckon that this is possibly some amount of closure of positions before we move into that event. But all in all, it's certainly a better looking Friday than what we saw last Friday, considering we are actually potentially going to close at a 7-day high. That's the hope, and that's also the reason why we have seen a substantial amount of covering of shorts over the past couple of sessions.
If I had to put money on this, 22,500 on Tuesday, possible?
It's hardly about 70 odd points.
And if that gets taken out, then you could all the way go up to...
It could potentially happen tomorrow, Samina, because...
we have a trading day tomorrow.
It's not a big gap.
Oh, who would have thought, right, Tamanna? We discussed this on Monday morning, and it doesn't seem like, it took a lot to bring the rally back on, but it's there for everyone to see. Jay,
I don't know how. Just sorry, before you go to Jay, just on that, I don't know how stable it is as a rally. It still seems very
wobbly, right?
Wobbly and circumspect to me. People are still trying to figure out which way this goes. So yes, definitely a few spots of green, but I don't know about how long it will persist.
Yeah, and it's also, I mean, if you've got to put numbers to it, we're only 2% away from our life high. So there was no major correction either on the street. But today it looks like a good and happy Friday in terms of trade. Well, Jay, we're going into 3 o'clock. If I had to ask you for stop recommendations, either in the short or long side, what would those be?
I have two longs, both on the railway space, and I like Ircon. I'm expecting that to clock fresh 50-week high, fresh all-time high. Stop at 239, potential to scale about 295 to 300. I like something a little more fresher, Texmaco. Texmaco has got a fresh inverse head and shoulders breakout. So a stop loss at about 165 for a price objective of 240. This, I know, I like Texmaco slightly more than Ircon because it's not being played that much, and the breakout is pretty recent as 2 days ago. So a slight edge for Texmaco over Ircon, but both are probably heading for fresh record highs.
Okay, so Texmaco definitely there, and not without reason. Some of the numbers that have come in were also fairly decent on the rail side of it. We'll take a very short break, but we're coming right back. We're telling you how you can set up your trade for the truncated session tomorrow, and of course for Tuesday. But we also have a special segment on the elections, not just in Maharashtra but in Mumbai. The 6 seats in Mumbai and the 4 in MMR go to vote on Monday. We hope all of you watching from Mumbai and the surrounding regions will vote as well. But this is an interesting elections because a lot has changed since 2019. So to break it all down for us, we'll be joined by a very special guest after the break. Stay tuned.
Welcome back. Europe's also opened up okay in terms of trade, so no sort of disappointing or uncertain news flow coming in from the rest of the world. 0.2% high, 50-point gain on the index, and we are holding on to that, and I think that is what you want to take heart from. Remember, today's opening was sub 22,400, but we managed to hold on, recover, and hold on to that. Jay, a bit of a contra call here, but we've already talked about M&M. Would you bet on a technical recovery on Tata Motors after that 1,000 points sell-off? 100 we saw from 1,047 to 934. Now on the stock, 100-point down. Do you feel like Tata Motors will play for a technical pullback at this stage?
Yeah, it could be not worth it, but yeah, the break of 920 was pretty significant for me. The fact that it was only an intraday break, that might be a little bit of breather for the stock, but yesterday's break below 920 was not encouraging for me, so I will avoid it. So far the decline hasn't shown such way that it's gathering momentum, but if it were to close below 920 for a day, then we'll be very cautious. We'll wait and watch. That's the best thing we can do, because even if you look at Maruti, that's also showing early stages of turning lower. So the Nifty Auto Index could get offset by weakness in Maruti and Tata Motors with strength in M&M. So a little bit of wait and watch. I'll take a call after what it does in the next couple of sessions.
Shikhar, what are you doing? Are you adding to Tata Motors at this stage, or you'd rather be with an M&M or a Maruti or even a Hero or a TVS and avoid Tata Motors for the foreseeable future?
I'd stick with, Tata, TVS Motors, because, the momentum, business momentum is in its favor. For Hero, Honda, business momentum is in its favor. These are the companies who are taking market share, increasing volumes, as well as launching new models. So the whole momentum is in place, and that margin improvement will kind of continue to play out, and they have this slate full as far as the EV is concerned. Now, Tata Motors had a bit of a slip up, but I think it's a temporary slip up. Clearly, they have, some 10 new EV launches over the next 3 or 4 years. So their plate is also pretty full, but I think in the business momentum is strong in the case of these two others, which is TVS and Honda.
All right, we're shifting gears, pun intended, from a focus on autos to something which has been the buzz on the street. Markets have been watching. Frankly, everyone has been watching what has been happening over the last several weeks. We're in the middle of a hectic election. Phase 5 commences on Monday. That's why markets are shut, because Mumbai will also be voting. Now, Mumbai and Maharashtra has become a very interesting sort of a situation. 48 seats in the Lok Sabha go from the state of Maharashtra. And so far, the NDA has had quite a dominant hold in the last 2 elections. Is there a change in the scenario now that you've had so many permutations and combinations among alliance partners? And Jitendra Dixit is joining us in our studios. He's contributing editor, NDTV, journalist and author. Jitu, great to have you on NDTV Profit.
Thank you, Tamanna.
Yeah, so
it's a pleasure.
We're glad to have you in our studios. All right, let me start with Mumbai. 6 seats in Mumbai and 4 in MMR, 10 in all. 10 on 10 has been the score of the NDA last time, even the time before. Now, this time you had the Shiv Sena split from the BJP, then the Shiv Sena implode, 2 factions, NCP 2 factions, 2 parts with the BJP, 2 with the Congress. So confusing to figure out what will happen.
Yeah, exactly. It's quite confusing this time. But before we analyze what could be the election results, let's look at what are the differences between 2014 elections, 2019 and this time. So what I see is this time there is no Modi wave like 2014, like it was in 2014. Secondly, I don't see any patriotic sentiments this time like in 2019 after Pulwama attack. So there was some sort of patriotic sentiment which had dented the anti-incumbency during those elections. But in these elections, nothing as such we could see on ground. And thirdly, this time there are 6 big parties. Last time there were just 4 big parties. BJP, Shiv Sena, NCP and Congress. But just like you said, that they have been split in two parties like NCP and Shiv Sena. So we have 6 big parties this time. As far as Mumbai is concerned, Mumbai is having 6 seats, and all 6 seats went to the NDA or Mahayuti, the smaller form of NDA here in Maharashtra. This time, I see that the NDA is in danger zone in 3 seats, at least 3 seats.
3 of the 6 in Mumbai.
Yeah, exactly. So one is South Mumbai, one is Northwest Mumbai seat, and one is North Central Mumbai. And these are the seats where minority voters, especially the Muslim voters, they play a very important role. And since there has been no alliance between Vanchit Bahujan Aghadi and AIMIM, Asaduddin Owaisi's party, so this is not going to benefit the NDA alliance, because last time Vanchit had made a big damage to the Congress NCP alliance, and in many seats due to Vanchit's candidates, votes were split. The traditional Muslim and Dalit votes had got split, and this went to the advantage of BJP. But this time I don't see that happening, although Vanchit has fielded its candidate over several seats. But there's no alliance with
So I want to understand, so in 5 of the 10 seats in MMR, I'm counting, all 10 together, you have Shinde Sena versus Uddhav Sena head-on in 5 out of these 10.
Yeah.
Now, I'm trying to understand how those dynamics work, because for the voters' perspective, this used to be one party till about 2 years ago. There would be various factors there. The Shinde Sena saying that, we are actually the original Sena, the Hindutva agenda, etc. Uddhav Sena, talking about the victim card. Does all of this actually seem like it will play out?
I think this election is being fought on the local factors, not the factors which you are saying, and it depends who are the candidates on each seat. That plays a very major factor. Secondly, I see there's some sort of sympathy also towards Uddhav Thackeray's Shiv Sena and Sharad Pawar's NCP. So that is also going to play a key role in the election results. Since Mumbai and MMR region is geographically part of the Konkan region, so Konkan always has been a stronghold of the Shiv Sena, and except I think 2 or 3 seats, on most of the seats Uddhav Thackeray's Shiv Sena is having edge where the candidates have been fielded.
And if I were to broaden this picture to Maharashtra, because this is now, we've been talking about 10 seats, but Maharashtra with 48 seats is the big question, isn't it?
Exactly. If we look at the whole picture of Maharashtra, last time the NDA alliance was able to fetch 41 seats. But this time I see them in the danger zone in at least 7 to 10 seats. I think one of the major factor for this is the Maratha agitation, which was going on till few months back for employment in the government jobs and education. That is one factor which the incumbents were not able to handle efficiently. So that has gone against the BJP. That's what the sentiments I have been able to decipher on ground. That is one thing. Secondly,
and how many seats did you travel? How many cities did you travel to? Because I know you've been doing this whole set of ground reports, which, by the way, you can see on NDTV Marathi. So, talking about our sister channel there, how many places did you travel to?
See, except the Vidarbha region, I have traveled across all the regions of Maharashtra. I have traveled in Konkan, I have traveled in Marathwada, I have traveled to northern Maharashtra, I have traveled across all the seats of Mumbai. So, except Vidarbha, but I am in touch with people in Vidarbha, with journalists, local journalists, and some of my contacts there. So I'm getting inputs from them as well. So
it's a tough fight.
Exactly, it's quite a tough fight, quite a bitter fight between the two alliances, ND Alliance and India Alliance.
Okay, so of course we will know what happens on 4th of June. But thank you so much, Jitendra Dixit, for coming in and speaking with us. Obviously, if you're very, very interested in politics, then do follow him. Look at what's happening on NDTV Marathi as well, where you can see all of those ground reports. But suffice to say, one way or the other, please go out and vote if you're in Mumbai, because we often get questioned and pulled up about low voter turnout. So that should not happen. Let's bring the focus focus back to the market's last few minutes of trade and, just taking that one leg forward, Chakri. I'm just wondering if this whole election play is something that you see continuing into next week as well, because that whole low voter turnout story seems to be put to bed, at least for now.
You're absolutely right in terms of, election-related volatility. As we go closer to the real date in June, the guesstimates will become kind of firmer as to the number of seats. And that is going to continue to play a big bearing on how the markets behave, because policy continuity is necessary for the markets to do well, which means that government continuity in good numbers is essential. So again, so from that perspective, clearly, yes, we need to buy, but buy with caution.
So east below 20 now. This is what I think could be slightly more exciting for the street. We're down about 1% odd on the week, sub 20 now. So it's slightly more comfortable for the bulls. Of course, for a lot more comfort, you would need to be at levels of 15, 16. But this is also not too bad from the way we are looking at it. The benchmark itself made an intraday high of 22,502. Trades flat as we see with the marginal uptake. Be interesting to see if we actually close above levels of 22,500 in the next couple of minutes of trade. Apart from that, while there are lots of movers and shakers, a couple of counters that we should highlight as we see it in terms of trade. You've got, of course, Keynes Technology topping the list of gains this afternoon with a 20% uptick is what we have on that stock. Along with that, you have a whole bunch of those defense names like an HAL, a BDL, that are also looking extremely well placed as we see it. Tech is seeming to be on the downside this morning, and some of those agrichem names that are looking good are also taking a bit of a break. A couple of other questions, Jay. What have you been looking at the trade on ABB and Siemens? This afternoon, it may not be as euphoric, but we've seen very good gains for those counters this week. Is there a trading opportunity on those counters?
No, I would say, it's an avoid. It's more positional trade than, it should have gone long around 6,700, 6,500. It looks a bit stretched now, but they are still not a complete move. Just from the point of risk reward, that's the reason it's an avoid. Otherwise, they still got higher highs to come. So I would be interested in looking at them on a pullback. Both have got gaps, and these gaps, if they get filled, they don't have to get filled. If they get filled, that'll be an interesting point for re-entry.
Choka, what did you think of ABB? The outlook, the brokerages, the euphoria justified, Chakri, on ABB and Siemens?
ABB, Siemens are very important, and if industrial activities continues to pick up, they'll be the primary beneficiary. And in terms of, their products are used across sectors. So it's industry, defense, industrial infrastructure, name it. So they're pretty much there across the space. And second, they also have access to their international parents for the new product launches, necessarily the new green world, which is out there, and the products related to that. So yes, these stocks are expensive. They've had a phenomenal run, but I think they'll continue to do well as stocks, as investments over time for these very reasons.
Let's bring the focus on Vodafone. Vodafone numbers were out yesterday. Not great, but, in line with expectations. Let me just put it that way. Losses have widened. Everything else was pretty much flat. ARPU is also 146 versus 145. But the con call has just concluded, and interesting views from the management as well. They're focusing on tariffs quite as, Bharti Airtel also had. And you're seeing Vodafone not doing too badly through the day. Quite volatile there, but okay, still at about 1320. Chakri, do you think Vodafone is an interesting bet right now, considering that, it's not being seen as such a lost case anymore, and there is some ammunition in terms of trying to compete on 5G, etc. How would you look at it?
You're right in terms of, given the fact that now there's a government stake in the company, there's going to be some amount of conversion of the debt, and there's going to be a fundraising, and hopefully there is going to be a tariff increase for both Bharti as well as Vodafone will both benefit from that. And so in terms of the market share, is there for them to gain, which is Vodafone, which has been losing it for the last few years in a row. So with a better balance sheet, it can afford to do that. I think so. If you can take that leverage bet that, yes, it's risky, but the risk reward of taking that risk is it can pay off over the next couple of years.
What about you, Jay? Any views on Vodafone as well as Bharti Airtel, actually?
Yeah, you put it rightly there. There may not be a lost case, but how long you will get locked within it as an investment. That's the only point you need to consider. It's had a good run from 5.5 to 18.5 the last year. So that's probably a four-bagger move. So you might want to put some money in it when it comes to about 10.5 and forget about it. Something like 0.5% of your portfolio, and maybe it can turn out to be a big winner. But nothing, no great allocation there.
Vodafone idea for you in terms of trade. Apart from that, the rest of the market is looking okay as we see it. On the sell side, Honeywell, E-Clarks, Prism, G Shipping is having a bad morning. What are you doing with metals right now, Jay? Is there a trade there, keeping in mind how commodity prices have been moving on the LME? It seems like there could be a little more upside that we could anticipate. Numbers also were not too bad from some of the leading metal counters back home. With the weaker dollar, rate cuts expected, higher commodity prices, would you play for metal gains this next week?
Yeah, I track copper pretty closely on the COMEX and London Metal Exchange. So copper is coming to a very important resistance, and it's probably due for a short-term pullback. Likewise, the Nifty Metals Index, it's got a stiff resistance about 9,800. And the momentum is dropping pretty steeply since the beginning of the year. So right now, even the names that have been bullish on, like Hindustan Copper and Hindustan Zinc, has started taking some profits, anticipating some pullback. But post the pullback, probably there is potential because there are multiple possibilities at the moment, and none of it have a bigger edge. So I would go with the possibility that the pullback could be more serious. So at the moment, I'm not bearish. Neither am I bullish, so I'll start lightening up all my positions.
Okay, so that's a story with Hind Copper. Just to set the stage for what you're going to expect next week. Jay, I assume not too much in terms of expectations from tomorrow's trade. Do you expect any action at all? And if I were to ask you what next week, Tuesday onward, looks like, what are the top themes that you have in mind? So if you're talking about a buy today, sell tomorrow, or buy today and sell on Tuesday sort of thing, I'm thinking about Grasum. Grasum, I'm interested in it. Probably at the recent high, it's at about 24.80. It looks like an incomplete move. And intraday also is looking pretty good. So probably it'll take out 24.80 sometime soon. So I'm interested in it. But when it comes to trade setup for the next week, maybe, once again, we see fresh record highs closer to 22,700 that we saw last week, and the markets gets rejected one more time. So if I showed you the chart I am seeing on the Nifty, it's got something very, very interesting, steep decrease in momentum along with the rise in price. I've not seen such a divergence in a very long time. So that's a pointer to be very cautious. Right now, we don't have any critical breakdown or breakout, but the market is already giving you some advanced warning. And also, if you look at what the markets do post an election, whether the incumbent comes back to power or another new party comes to power, the markets, from a medium-term perspective, always goes back to test the breakout level of the year, of the election year. So that's about 20,000 mark. Right now, I'm not projecting that. If a breakdown might occur below 21,700, I think that will get tested.
Agree from what you've seen from the earnings, which is pretty much at the fag end, almost done with, 2 or 3 counters that you were impressed with that you have added to your portfolio?
It's all clearly industrials, manufacturing, defense, railways. All these companies which have done phenomenally well. Take a company like Hindustan Aeronautics. This company has already gone up several times in the last couple of years. The company has reported earnings. Its profits were up about 150%. And it has got an order book of 8 times for the next 8 years. And the stock still trades at a reasonable PE of 32 times. So growth in its context like that. So that's the space. Container Corp, today's numbers, again, very good. Still a very reasonable company. And in the industrial bearing space, Timken, NRB bearings, that's the space we've been adding.
Chakri, Jay, thank you so much for joining us. Look forward to a positive truncated session tomorrow and back on Tuesday. So it is a bit of a long weekend. Hope both of you also vote, as will all of our viewers. Let's pull up and see what markets are looking like. And at the end of close, we'll pull up the weekly charts as well, because what a week this has been. The positive news is that you look like you're closing in positive territory decisively over 22,400. Don't be surprised if you hit 22,500 in the short period of trade. Tomorrow is just for a few hours, so remember, tune in to NDTV Profit for that as well. We'll be on top of it. I want to pull up the advanced decline ratios through the day and just take you through what kind of a day it has been overall. So steady. Not great in terms of volumes perhaps, but steady. Your advances overshooting the declines, and the heat map will tell you where the story really is. It's been good for auto. It's been good for select, metal stocks as well. But Grasim coming up to the fore at the end of it. Now, the whole Novelis situation has been a push for Grasim. Ultratech also up there. So, your old economy pieces doing really well. M&M, the star of the day. There's no doubt about it. Nearly 6% up on close, going steady, going strong. I just want to pull up the intraday of M&M for a second so that, you can see what kind of a rock-solid day it has been for M&M throughout. Hit a high of 2557, not too far from there, to be honest. But back to the heat map to see what's on the losing side. And Cipla languishing to some extent. TCS and Cipla alternating to who's the top loser over there. The rest, if you see, don't have massive losses. Most of this chart over here in the mid territory, I would say. And that's really been the story, isn't it, Samina? That the big sort of action points coming in on the mid cap and the small cap space. In fact, let's pull up the mid cap and small cap index as well and look at it, what kind of a move we're seeing towards close. And not bad at all, nearly 1% up on mid cap 100, small cap also doing nearly 1.5%.
Yeah, this is when the DIs are buying aggressively and the FIs continue to remain on the sidelines. And this is really the picture on the small cap index. Your micro cap, small cap is largely where the party has belonged to for the last couple of years, and that's the sentiment. Expensive, not expensive, debatable, but the stocks itself, there you go, the microcap index is up over 1%. So that goes to show you the euphoria and maybe a little bit of fraud, some may argue, in the broader marketplace. In terms of reactions, I think defense stood out, PSU names stood out. So if you're in the shipyard business, if you're making anything to do with the defense equipment, these counters are looking really good. Garden Reach had an order win. It's a cash market stock, but had a good run. Cochin Shipyard is up 5%. For no apparent reason this morning, apart from the fact that that's a shipping stock, so we'll keep that aside. But Mazgaon Docks also had a recent visit from the Defense Secretary. All those factors are contributing really well to this pack across.
But just think of it, recent visit from the Defense Secretary
and that's all it takes.
Is 12% up.
Yeah.
So, but you're right. Defense, one big theme.
Yeah.
I just want to pull up the top gainers and losers on the BSE 500. So that gives you sort of a broader picture and exactly what. Samina was saying, Bharat Dynamics, Mazgaon Docks, Crompton, complete star today on very, very okay numbers as well. Dixon Tech doing fantastically despite tepid numbers, I would say. So that theme also continues on what the bet is.
Yeah, and real estate. So that is another space. InvITs in real estate, again, a good sweet spot for the markets to be in. We've seen how well some of these companies have done. On the sell side, it's largely an earnings reaction. So you have E-Clark's numbers were fairly weak. Honeywell has been making wild swings, like we said, gave up pretty much all its gains from yesterday, down 5%. Prism John, not much of a significant counter, but saw a little bit of a cut. Voltas, Aditya Birla, so the rest of the counters pretty much losing without any apparent reason as such. But the top gainers on the Nifty 500 or the BSE 500 are coming in terms of earnings reaction. We are going into a long weekend. Of course, there is that short trading session tomorrow. Volumes will be very weak as expected.
I just wanted to see how the weekly charts look before
I think we are closing about what we did. So
at
the week's high.
That was the bet that we talked about on Monday, that do you close up, and your Nifty is closing 2% up and near the week's high.
But Tamanna, we have to admit, this came with enormous amount of intervention. It had very little to do with what the F&O position of the street was. You had the Election Commission coming out and commenting. You had comments from Ministry. So Amit Shah's comments on our channel where you've got to go buy the market till June 4th.
The mood has been positive, I would say, in terms of that whole uncertainty. This chart is showing you how the mood has changed over the week when it comes to that election uncertainty. Just the mid-cap weekly chart as well and the small-cap weekly chart.
That would have been far better than the Nifty itself. 5%.
They're far better than the Nifty on the mid-cap, 5% up. The small-cap also nearly 5%. So
pull up the micro-cap. Let's see what that also got up to. I think 4 to 5%. 5.5 led the way on the way up on the micro cap. So that's pretty much what it is. DIs continue to buy. Funds are buying aggressively. Earnings has been largely slightly better than expected. We've got an earnings growth of 10 to 12% on the Nifty 50, but the street doesn't seem too disappointed. And that's how the week's been. It's been an exciting week, and we've got a long weekend. But like we've been saying, please go out and vote on Monday. It is an important day for all of us. So don't go away traveling this weekend is all we need to say. But thank you for watching.